Very good afternoon, everyone. Welcome to today's uLaw webinar. The topic for today's webinar is Trust and General Reconciliation Demystified. Okay. Today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Once again, I repeat that today's webinar, titled Trust and General Reconciliation Demystified, has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So kindly use the chat window at any given time if you want to ask us any questions. Please do use the phone numbers provided at any time for better audio quality. And this session is being recorded and will be available in our YouTube channel. Like every other uLaw webinar, today's webinar has a specific agenda, especially because it's a CPD session as well. And we're going to specifically talk about the reconciliation process. And we're going to divide the reconciliation process into the trust and the general reconciliation. If we have the time towards the end of the session, I would probably use the example of the uLapractice as a legal accounting software and how reconciliations are done, kind of walking you through the differences between the two different reconciliations. Of course, if your firm does not deal with the trust accounts, then of course you don't have the responsibility of doing the trust reconciliation, though it's always prudent if you can do a zero trust reconciliation, even if you don't use the trust reconciliation, if you have it. Then we'll talk about what does it take for you and your law firm, legal firm, to be audit ready, because in many of these audits, what's being asked for are, of course, the reconciliation documents, at least on a monthly basis. And of course, once you have that reconciliation document done, then of course you are almost ready to generate all of the other documents that are needed to tell a story, your financial bookkeeping story to your auditor, whether that's the journals, ledgers, expense book, whatever other documents that are required. The importance of the reconciliation document is that you can be prudent to the numbers that have come in and the numbers that have left that account in that particular time period. And of course, we'll talk about some of the core aspects of the audit readiness for the financial management process, which is, of course, a part of our Everything Practice Management webinar that we conducted a few weeks earlier. Okay. So let's start with what is this reconciliation process, why is it required, and specifically focus to start with the trust reconciliation process. So the reconciliation process is a bookkeeping or financial process that allows you and your firm typically to close the books for that specific time period for you to reconcile, as the word sounds, of the transactions or the events that have touched a specific bank account, whether it's a trust, general, or multiple accounts within that general account, of money that's come in and has left, and the reasons behind why that money came in and why it left, right? Now, these transactions and the nature of these transactions and the specific reasons for these transactions may vary from firm to firm, but the truth behind the number that it came in at and the reason for it and the number that it left at, especially with the date stamp on it, is a must, and that truth is something that's similar for all law firms. And the reconciliation process allows you to stay on top of these events and, of course, balance the story between what the bank tells you, which is really the fact of the matter, because you actually have transactions coming in and out of the bank, and comparing that with, of course, your own bookkeeping system where you write down the notes, right? Whether it's a full-fledged legal accounting system, like I had in my previous slide share, whether it's a full-fledged legal accounting software that you use to manage your books, whether it's a general accounting software that you use to manage your books, or even if it's a paper-based process that you have with your legal firm to write down these transactions as and when they happen with all the details. Does not matter the process that you have. Of course, with the legal accounting software, it saves you time and money and effort. But whatever system that you have, the reconciliation process allows you to match what you've written down as the records of the events that have happened in that time period with the records and the events that have occurred and touched your bank. Okay? So it's an accounting procedure that demonstrates that your records are correct. And when we focus specifically on the trust reconciliation process, we have broken it down to make it easier for you to appreciate and understand. We've broken it down into 4 steps. And this is what the Law Society wants you to present as part of that trust reconciliation report. It's very much derived from the Law Society's bookkeeping guidelines, which gives you this template or this example of Leslie the lawyer and the firm's trust bank reconciliation, right? So that's what we've taken up. So there's 4 steps in the reconciliation or data points that are collected within that reconciliation, trust reconciliation report. Number 1 is the recording of the bank statement and the balance. So basically opening your bank statement, whether it's getting a report on a monthly basis or using your online banking to, deciding when you're going to close the reconciliation. So the first step, of course, is to decide end of the month or a time period. Typically, it's recommended to do it a few days earlier before end of month. Within systems like uLaw, you can actually reconcile on a weekly basis to really catch up on a timely manner. But when you generate that reconciliation report, it's typically on a monthly time period. So let's say at the end of the month, 28th or 29th of the month, you're closing your books. That is the date that you would use as the base date to open and understand what your bank statement's balance is, right? So that's really step 1. Step 2 is understanding for that time period as you close that date, what are the outstanding checks and deposits, okay? So outstanding checks are where there's the situation where you may have sent out a check and the client or whoever you wrote this check to may have not yet cleared that check. So if you've written a trust check for, application form, and let's assume that that application form has not yet been deposited, or maybe a refund of a retainer. Great example, in some cases, in very rare cases, the legal firm may have to send out a retainer refund. And let's say you've sent out a check, and that check has not yet been deposited into the client's bank. It would still show in your own bank as money residing in your bank, whereas in your bookkeeping system, you may have already accounted for that money having left your system. The flip side of that is, let's say you have actually got the money, but you've not yet reflected it in the bank, in which case you've mentioned it to your bookkeeping system that you've got the money. Let's take the same example of a new retainer. Let's say you've got the check, you reflected it into your bookkeeping system, you've not yet deposited it into the bank. Or you've got the retainer, you went and directly deposited it into the bank, but you have not yet written it down or informed your bookkeeping system of that event. In all these cases, we're just looking to ensure that there's transparency and a bit of matchmaking between the bank and your book system. So that's really recording what are the outstanding checks and deposits, including any bank errors that may happen, right? So if you have not informed your financial institution that they should be taking out any bank charges directly out of your general account, and let's say at the end of the month they actually remove $10 or $15 out of your bank, right? And your bookkeeping system, of course, would not be aware till you tell it, because you open the bank statement at the end of the month and you suddenly notice $15 being taken off that bank, then you need to adjust that as a bank error in your bookkeeping system. Because, right? If you caught it earlier, you can of course reflect it as a either ways. You have to ensure that you tell the bank to not take that money off your trust account. But that's an example of the bank errors. The third step is now recording of your client's trust listing. So this is done at your end. Step 3, importantly, is done at your end, where you, of course, have a list of clients. You would then now have to have a list of all the money that you've received from this client, all the money that has been taken out of that trust account, and the remaining trust balance based out of each client. So that's the client's trust listing, where you have the name, the specific matter, the last activity date. So as of that last date, what is the balance in that individual file's trust deposits? So that's the client's trust listing that you manage and maintain. And step 4, of course, is to balance or compare, if you will, between what the bank says as the reconciled pooled trust or mixed trust balance as of that base date that you're closing, comparing it to what your bookkeeping system says is the unexpended balances based on the client's trust ledger. And when these two numbers balance, then you are able to confidently reconcile that particular time period, let's say that month. So 4 steps when it comes to trust reconciliation: record keeping of the bank statements or recording of the bank statements and the balance, recording the outstanding checks and deposits, if any, in that time period, recording of course, the client's trust listing with the file name, last activity date, and the balance. And the 4th step, of course, is the comparison between the bank and the bookkeeping system. So hopefully this was clear as to what's expected out of the trust reconciliation process. Those are the 4 major data points that reside in that document. How you derive that document is, of course, completely left to your internal tools and processes that you have to deliver that document. And once you have done that trust reconciliation, of course, generating the trust ledger, the trust journals, all become that much more easier because you have now almost written and confirmed those numbers in stone. In the rare occasion, of course, that if you do make a mistake, you would be able to, of course, go back and unreconcile that statement and re-reconcile it. But mostly people carry forward any transactions that have occurred maybe after the fact. So if something happened after you reconciled on the 29th, 30th, and if you're using 28th as the base date, then the 29th and 30th pretty much moves into the next cycle of your reconciliation. Now let's move on to the reconciliation of the general account. Okay. Now the reconciliation of the general account has, of course, 2 benefits. It is most certainly a Law Society requirement, but in addition to that, reconciling your general account, of course, gives you a true number of money coming in, money leaving that general account, so basically your revenue and any disbursements or expenses that have left the account. That gives you a very clear indication of the profit and loss that resides in that general account. Okay? So it gives you the opportunity to run all of your health checkpoints for your own firm based on that base reconciliation number that you get, saying what's the final number left in that particular general reconciliations balance. From a reconciliation data point perspective, as you can clearly see, it has 1 step lesser than the trust reconciliation itself. which is that, of course, you do not have the client's trust listing as a requirement data point in the general reconciliation. That's pretty straightforward. But it's very similar to the trust reconciliation. The general reconciliation is also an accounting procedure that ensures that your record keeping is accurate for your general account. And if you have multiple general accounts, it's recommended you do this for multiple general accounts as well. And the three steps or the data points that are collected as steps within the general reconciliation report start with the recording of the bank statements and the balances, just similar to your trust. The recording of the outstanding checks and deposits, very similar to the trust. And the third, of course, is the comparison between your own internal bookkeeping ledgers to what the bank has to say. So very similar to trust as well, with the only exception in the general reconciliation is that you do not have the need for the client's trust listing, which is pretty much your step 3 in your trust reconciliation. Okay? All right. All right. Now, to prepare the reconciliation document, what pieces of information do you need to begin with? Now, we believe if you really break it down, if you've been due diligent in capturing the events, ensuring that you're documenting all the work that's been done, all the events that have occurred on a regular basis in that time period, and repeating it time after time for every time period. So let's use the month as the time period. If you have been due diligent of record keeping, documenting all the events, every time you got a retainer, you right away tell your system or write it down, make sure you have that record keeping available, that you did receive that retainer, when did you receive it, the amount, all the details that go along with it. And anytime you paid yourself, you moved money from trust to general, then of course telling both the trust account and the general account in your own bookkeeping system that 500 was taken out of the trust account, 500 was deposited into the general account. Making sure that audit trail and capturing in some written form of these events is a critical must-have before you move into the reconciliation process. If for some reason during that reconciliation process that you find out that something was missing, you forgot to enter that retainer, you can of course always go back, add it, come back, and reconcile. Right? But the three pieces of information that we believe that are important is of course the date of the reconciliation. So what is that base date that you're applying this reconciliation on? As of what date are you closing your books? So that's really the date of reconciliation. As I mentioned earlier, it's typically at the end of the month. Okay? Knowing the balance as per the bank statement. So on that particular date, you would open up your bank statement, you would take the date range to close on that specific date, and you would look at the bank balance, the one in bold, right at the bottom or at the top, depending on your bank. And the third is ensuring that you're clearing all the deposits and withdrawals one at a time. What money came into that account, what money left that account. And of course, in your own bookkeeping system, the big difference between your bookkeeping system and why you need it is that you can truly explain and expand on the reasons for these transactions. So if you look at a bank statement, you're going to see maybe, with an exception of a few, money coming in, money going out, with not much of an explanation of why it was. The explanation of that money and why it went into the account and why it left that account is a lot more easier for you to explain in detail within the bookkeeping system. So if you've received a retainer for a family matter for John Doe, that level of detail is not going to be available in your bank statement. It's just going to say on 5th of June, you had a deposit of $2,000. If, of course, you've done some expenses and you used a credit card, or maybe you paid Amazon or eBay or some of those known vendors, some of the banks today do help you by explaining, again, the vendor that took that money out. They still would not be able to tell you that this particular transaction out of Amazon for $1,600 was for that Dell laptop that you purchased for your business, right? So that level of detail is what the bookkeeping system comes in handy. So use the bookkeeping system to tell you the bigger picture of that transaction. Use the bank to tell you the factual facts of the numbers and the date when that transaction happened. When you have these three pieces of information ready and available, you are now able to get into that reconciliation process. Okay? So we've kind of looked at what are the differences, what is the reconciliation process, which is really an accounting procedure to match between the bank and your bookkeeping system. We've looked at the trust reconciliation, the general reconciliation, the differences between these two systems, the three pieces of information that you need as a firm to conduct this reconciliation process. And now we get into, of course, talking about how does this help you? How does this make you maybe even audit-proof, if you will? So the reconciliation process, of course, is a law society requirement to begin with, and hence it's important that you do this. When you do this is really the question. Do you do this in the nth hour? Do you do this just before an audit? Do you do this maybe after you've been informed of an audit that's coming up? And how you do it? Do you use the time and effort to do it on a regular basis so that you're always catching up yourself? Are you a solo entrepreneur who doesn't have the time and money to do all of this, or necessarily the money to do it? Are you outsourcing this reconciliation process to someone else? How much of a control do you have out of that process and the numbers that come out of that process? Do you have all the details to support? Even if you're outsourcing it, a bookkeeper or an accountant is wanting to always come back to you. They're going to come back to you asking for questions, right? I'm sure you've seen this. What is this transaction for? You don't have a clear explanation. Then you would have to go back into your books. You anyway have to do that homework to go back to your books and then say, oh, that was the $2,000 was for that family law matter for John Doe, right? But if you are able to do this on a regular basis, find the discipline and learn what goes behind this process, demystify it really. And it's really not a rocket science beyond a point. It's a bit of a uncomfortable, a bit of a discomfort when you actually get starting to do it, because you're not dealing with the facts of the matter. You're dealing with how much of money is going in, money is going out. Sometimes we like to close our eyes away from dollars that we spend, not having to see the real profit that we hope to see in the account. And there are many reasons. Time is a great reason. If you've been very busy doing other things, or if your matters have kept you busy, you don't have the time for this. Sometimes you don't have the appetite for it, which is understandable. So there could be many reasons. But regardless, it's important that you understand the benefit of the reconciliation process. Of course, the reconciliation, we believe, is designed to catch two primary problems or issues. It ensures that you catch all the transactions that you have in your bookkeeping system or your accounting system or your record keeping system that do not match your bank records. Okay, that's number one. Number two is, of course, it catches all of the bank transactions that you forgot to enter into the bookkeeping system. So it's in the bookkeeping system, it's not in the bank system. It's in the bank system, it's not in your bookkeeping system. Okay? That's about the only thing that you're going to discover if there's a mismatch. You've got the retainer entered into your bookkeeping system. It's not yet in the bank. So what could have possibly happened? What do you have to do as a remedy? Is now you have to find that trust check or whatever was used, let's assume trust check, maybe you left it in your office drawer. You can pull it out of that, run to the bank and deposit it so that now it shows up in that bank records as well. Of course, if you can do it within that reconciliation time period, then it helps because then it's all contained within that month. If for whatever reason you found it during the reconciliation and you can only do it, or it's only going to reflect after that reconciliation date, then you have to leave it as an unreconciled transaction, indicating that it was an outstanding deposit. Right? So that's really what it is. Likewise, the information is in the bank. The $500 has been deposited in the bank. And you see it. But you come to your bookkeeping system and you have no audit trail or no record of that $500 of money in that trust account. So that really means that you may have forgotten to create the matter, associate a file number for that matter, and accept that retainer and tell your bookkeeping system where that money went. Right? You got the check, you deposited it, you moved on. At the end of the month, you realize that you haven't told yourself what happened with that earlier this month. So that's that situation. So the reconciliation, of course, helps you and is designed to catch these fundamental two issues that are very pragmatic to the reality of life. If you can cross this hurdle, ensuring that you are catching these transactions as closely as they happen, so almost doing, let's say, a preview and reviewing this almost on a more regular basis than waiting for the end of the month, then you're doing slightly better at being efficient. And that's what we're looking to push you towards and for you to try. But if you have reconciled on a regular basis, what's the candy at the end of this exercise, right? What do you get as a benefit of being this disciplined? What's the benefit of doing that? Is very simple. The accounting system that we all dread and fear is now going to be up to date. If anyone asks you on a reconciled month what the numbers are, you're going to be very happy to tell them exactly the numbers as they match in the bank. If it's a general account that's been reconciled, you exactly know the money that came in, the money left, and hence the subtraction of those two elements gives you the profit or loss. So you can be very confident of that number. And you're, of course, audit ready from day one, because you are going to be audited within the first 12 to 18 months of you being in business, and then there's a regular cycle after that. Everyone's different, the way it's been worked with the Law Society's audit. But if you can do this on a regular basis, very subliminally, behind the scene, you're actually getting yourself to be audit ready. Now, you don't even have to generate the ledgers and journals, because that is a requirement. At the end of the month, you want to really close out with the reconciliation document to begin with, and then all of the documents that tell other chapters of the story, which is the ledgers, journals, expense book, etc. We'll look at it in a minute. But all of that, to be very honest, worst case scenario, you don't even have to worry about those, because if you have reconciled, if you have the right tools, you can always go back in time and generate the ledgers and journals. Provided you reconcile, then you have the confidence of that reconciliation statement for that month. And we spoke about the general reconciliation. So the next point is really being ready for even filing taxes with the CRA, right? So you really know what your P&L is, and of course, you're paying taxes based on the P&L, right? So if you know exactly you made $5,000, you're paying whatever percentage on that. If you know exactly that you've lost $5,000, then of course you don't have taxes, so you document that as the number. Now, as a business owner, especially if you find yourself to be an entrepreneur or a solo entrepreneur who is juggling between many different things, the right tools, legal accounting softwares, and software in general empower you with a lot of analytics And information derived from data. Because you have the data around what these numbers are. You reconcile your month and it says $2,000, but that's just data. But then now you can actually apply schematics on top of this data and say, what was the profit 3 weeks earlier? What was the profit this last week? What was the profit compared to last month? So having your months reconciled makes those analytical numbers that much more meaningful and truthful. So you as a small business are suddenly empowered with the magnitude of a large law firm, because the tools, of course, it's software. It's going to work out of the data that's in the system. And as much as good data that you have, you're going to get good information back. If you have bad data, then of course you're going to have misleading information, right? Leading to, of course, the right reports and the right information that can leave an impact on your business. Making sure you're able to make good business decisions, whether that's marketing effort, whether that's reducing expenses, whether it's focusing on an area of practice that is more profitable to you as a business, or cutting down on an area of practice that is not as profitable as you deemed it to be. These are all the smart decisions that you can make based on the right information. And for the right information to be presented, you need the right data. And reconciling on a month-to-month basis is going to assure you of the right data available to you. Okay? And last but not the least, the biggest intangible is the peace of mind. Many days, many times we've heard from clients, the biggest fear factor they've had is the audit, the fact that I have not caught up reconciling my monthly statements. Now I have 3 months to catch up. Whether you use a legal accounting software like uLaw, whether you use a Microsoft Excel sheet based, you use a software that's PC based, or you write this in a old school ledger book. The systems are going to help improve efficiencies and give you just-in-time information based on the context of today's day and age and keep you competitive. But the value of doing this process remains to be the same. It's only the time and effort that goes behind doing that changes. But doing this process on a regular basis, no matter how you do it, is going to leave you with that peace of mind. And just adding to what I just mentioned, if you have these documents, especially the reconciliation process done, both for your trust and general. So these are 2 bank accounts that you have, and those are the 2 bank accounts for which you have to do these reconciliations. And you would notice certain law firms find it easier. It comes down to volume. If you're doing, 30, 40 real estate transactions a month, of course, you have to then expect those many transactions of ins and outs out of your trust and general account. If you're doing maybe 5 to 6, what's a good example, criminal matters or family law, then, it all comes down to volume, the right skills, the right tools, and the time to put towards reconciling it. But once you've done it, you're most certainly audit ready. As I mentioned earlier, once you've reconciled, then generating the Law Society's compliance document, such as the trust ledger, general ledger, trust receipt, trust payments, even your expense and fee book become that much more simpler and faster. So we wanted to take a step back to, of course, help you or reinforce this if you've already been doing a great job, to continue down that path of having a bit of a checklist, if you will, of the right things that you have to do so that you're staying on top of the data capture. Okay, so really the question then becomes, okay, how often should I be capturing this data, right? of all these events that are happening in my legal life with regards to the financial transactions. Of course, if someone just came and met you, as a friend, it's not a client, it's got nothing to do with your legal life, that's an event that's occurred in your life. You probably are going to capture it in your biography. But if it's a financial transaction that's happened with your legal life, that same friend is now a client and has given you a $1,000 retainer, then you're basically writing a chapter in that. And every month is just a chapter of your reconciliation biography, which is telling the story of the financial transactions in your legal life, right? So that's how I'd like for you to look at it. Now, in real life, you may not take a picture or a video or write down everything that happens every single moment. There are a few who do that. But in the legal life, it's important that you must capture each of those transactions. The better is to capture it as and when they happen so that you don't forget it, because it's important that you remember it at the time of reconciliation, whether you're answering a bookkeeper or you're answering yourself, as to why the heck did this $500 deposit occur in my trust account. Scratching your head over, where can I find that number? Or if it was an expense, and especially if those small numbers, the $8.94 transactions can kill you. So if you have a certain process, the right tools, and I repeat that because that's really what it comes down to. Whether you're handwriting it into a piece of book, then you have to do it more due diligently, or you have to really trust your memory, or just do voice notes. There are many ways you can do that. Or if you're using a legal accounting system or any practice management software with the legal accounting component to it, then you're helping yourself not only capture the moment, but the legal accounting software would also convert that into almost an auto-written biography, if you will. You don't have to write it even. It's written in a template and document that easily can be understood by the Law Society, right? So what are those moments? A retainer is a great moment of capturing. Someone paid you money, that's a financial transaction. That money comes into the retainer account. Write it into that bookkeeping system or write it down, capture it right away, put all the details in it right away. Okay? Or if there's no retainer involved, someone just paid you for a legal representation. That client payment needs to, of course, be recorded right away. Yes, take the check, run to the bank, or, of course, in today's day and life, you have email transfers in electronic means. But once you have seen the money in the bank, record it as a transaction. You're doing almost a commentary of your legal life. Let's say you're doing a trust transfer. You've accepted the retainer. You've docketed the time and effort, right? Those are dockets that then convert into fees and disbursements maybe, then that you're sharing with your client. So that's events that you're capturing so that you can be prudent to tell your client as to the amount of dollars that you're going to be withdrawing from your retainer based on the effort and disbursement spent, right? We all tend to do that because that's the fastest way that we could capture the revenue and make sure that we're collecting that revenue. Often the reconciliation of those transactions are left to the very end because it's not a money-generating task. But it's a certain irritant in your mind that we're willing to put off to the end, maybe because of the different processes that existed, but in today's day and age, for a legal professional, the amount of technology that has evolved has really empowered you to not go that route of putting it off till the end. There are tools that allow you to capture them one faster, make it easier for you to enter it, and not have to worry about it after that. So another capturing moment, like a Kodak moment, if you will, would be when you do a eligible trust transfer from the trust to general. In this case, there are two different systems that are being touched, or bank accounts, if you will. When you do a retainer account, of course, from a real bank perspective, of course, there are two transactions there, but you don't have to worry about the money leaving your client's bank. You only worry about money coming into your trust account. But when you do a trust transfer between your own banks, between your trust account into your own general account, then you, of course, have to account for money leaving the trust account. That's a part of the trust reconciliation, and money entering the general account, which is accounted as part of the general reconciliation, right? Now you see that transaction has resulted in two touch points that are meaningful to you. If it's just a client payment that comes directly into your general account, just like the retainer, someone paid you, you don't worry about it, the debits, credits on the client side. You just worry about the deposit into your account. So retainer, client payment, eligible trust transfers are some very good examples of transactions. Of course, disbursements, which are then accounted for in an invoice, are very important, especially if you're paying out of the general account. Very important, because then you have to account for it so that you can recover that expense, especially if you've said that disbursements are not part of the deal, where the client does have to pay you for the disbursement. Very important. So those have to be accounted for. That's another capturing moment. If there are any outstanding payments that you're waiting for, so let's say you've generated an invoice and it's beyond the 60, 90 days of your wait time, then of course you have to reach out to the client. That's a capturing moment too, because you have to close your books. You are always going to leave that one transaction pending when you're doing a reconciliation, right? So accounts receivable is important for business, also important for reconciliation. And also the Law Society has policies and guidelines as to how long you can have trust balances for a client, right? If you have it for an elongated period of time, then there are certain responsibilities that you have as a legal firm. You have to, of course, inform the client, write them a letter, and then maybe send them a refund. You cannot hold it for a very long time. So being on top of these types of examples of moments that are required to be captured are important. As I mentioned earlier, doing the reconciliation process is a must. How you do it is completely left to the style and nature of your own business. The only caveat from this slide is really to help you understand that there's help if you need it. But if you do need automation, here's a great investment that companies have made, not just an individual company. There are many companies that are making that investment, uLaw being, of course, one of them. It'll help you alleviate that pain, help you capture the moment faster, easier, convert those moments into a self-written biography of your financial transactions, if you will. And because there's a few nuances into how you capture them and write them, it's not as easy as writing a story. There's a lot of behind-the-scenes stories that need to go to, of course, highlight the importance of that story, main characters, right? So yes, so there is help. There's technology that's available. You have now digital phones that allow you to capture an expense. Let's say you've just done a capture an expense, whether it's gas or meals or anything that may be for your office. You can just take a picture of it. You can enter that right within your phone. You have the OCR systems that have been in business for a very long time. Optical character recognition that can scan that receipt, enter details into your system, of course, reducing that manual entry. And if you're not, a person who's going to capture the moment as and when it happens, you are like, I want to do the end of the week. I like the weekends. I use that as my downtime to do all this work. Now there are tools that allow you to import your bank statements that you can do over a period of time. You don't have to do it every day. You can download your bank statement for that week, import it into the tool, which pretty much captures all transactions that happened that week, and then you just go, boom, this was for this is for this. You still have to validate and clarify what these transactions were meant for and use that as an opportunity to expand and reason out those transactions, because time comes to reconciliation, they will come really handy. But yes, you do have those tools now available, which was not available even, let's say, 10 years back, right? When digital bank statements were not even a thing, or let's even say 15 years back. Now it's become almost a must-have. So do your research, take advantage of these tools, explore them. Most of them offer trial accounts that gives you a time, and make sure you do your due diligence, of course, before choosing the right product that's right for you. Long story short, importance of a legal accounting software or any software that you best use to your reason. The difference between the legal accounting software and maybe not a software that's not legal accounting is the subtle difference that it allows you to capture the moment and convert it into legal accounting lingo that's understood by the law society in a certain template, certain format, and certain style of representation. Right? If you're not using legal accounting software, then you have to find the means to templatize it so that it looks like that. Okay? But no matter what system you use, keep in mind that you got to record the events as and when they happen. So does the legal accounting software. It allows you to do it right away. It, of course, maintains the record keeping of both your bookkeeping and bank, and very importantly, allows you to reconcile legal accounting software because they capture all the different touch points of those transactions, give you the true essence of a reconciliation document. And of course, it comes down to compliance, accountability, and ease of use. All right, so with another 10 to 12 minutes left in the presentation, I do want to spend about 10 minutes with talk the talk, and we can try and do the walk the walk. For more information, of course, you could go to lso.on.ca or lso.ca. They have, or you can just search on Google for spot audit, audit checklist, and bookkeeping guidelines. Of course, this presentation, as you could see, is something we've been running for a very long time. The name has even changed from LSUC to LSO, but we have to keep it the way it is because it's been approved by LSUC. That being said, you could just Google LSO, or if you're from British Columbia, New Brunswick, any other province that you're from, just search up bookkeeping guidelines for your law societies, and they all have wonderful documents that explain the importance of reconciliation. Okay? All right. Someone just said they couldn't hear me. I hope this is better. Let me just see if I can improve the volume. Hopefully this is better. All right, perfect. So let me now shift gears just for the purposes of proving the point or just walking the walk, if you will. I'm going to walk you through, what the reconciliation process looks like, what a document looks like, and how transactions as and when they captured roll into the reconciliation process for you to really understand the whole flow, okay? So let me start off with maybe doing a reconciliation for a trust account. And I'm using the uLaw system, of course, just as an example. As you can see right now, there are no transactions. This is a fresh blank slate. There are no transactions in my trust account as of today's date. Okay, as of 5th of June, I don't have any data capture done. I would do the same thing for my general reconciliation. As you can see, I've been a good boy, prepared for this demo. I've cleared out all my transactions, are reconciled. I'm good. Now, let me show you, let's take a real life example of a client, a matter, and do some transactions, and let's see how it feeds off into that process. So, day to day, you do this every day. You're going to add a new client. So let me start off with that. Let me close out these reports real quick. I'm just going to say add new contact my clients, and let me say Miss Mary Poppins with the different spelling. Okay, that's fine. Include a random name, Ontario, and you can go on. You can provide more information, but we're going to skip all of that to really cut to the chase. So if you've got a client, day-to-day happens in every legal firm. You're going to enter that client's information. Of course, you would do a conflict search. You would do a lot of other, client ID verification. Do what you have to do to validate the individual and making sure that it's okay to represent the individual or individuals, or it could be a company, whatever may be the nature of that business, right? But I'm just going to walk you through the financial capturing of these transactions. So let's say we go ahead and create a file or a matter for Mari Poppins. I'm just going to hit matter. Really doesn't matter what this is about, but let me go ahead and say, all right, it was a small claims. Some random description. Mary was Stella. Maybe a plaintiff-defendant situation, right? Create a file. Now let's start with a pragmatic situation. Let's say you sign up a retainer letter. Okay, you've got a retainer letter going. You can, of course, generate PDF Word documents from different systems. Each practice management, each legal accounting software provides you with various options. uLaw provides you with options as well to generate various different types of retainer agreements. Let's assume you've signed up for, my favorite number of 665. I'm considering, of course, this being a legal practitioner in the province of Ontario with 13% tax. So let me go ahead and intake that retainer. So I'm just going to say retainer, new retainer. Very important as you capture. So this is that capture moment, right? This is like your friend visiting you and you're taking a photo. This is a client visiting you with money. So you're going to capture that moment. It's $565, I'll say $665, $100 disbursement. And let's say he gave you a check. And now telling uLaw that you're depositing it into, of course, the appropriate trust account that you have for your business, whether it's with TD, Scotia, RBC, whoever you bank with, credit union banks, informing your bookkeeping system, even if you're writing this down on a piece of paper, telling them where did that money go. Very important, as the Law Society recommends to provide a retainer receipt confirming the amount and the date that it was received and the format through which that payment was made, the method of payment. Because you want to use this as proof if by any chance Mary Poppins comes back and says that she actually paid you $775. Right? Here's the proof. You sign it, you get your client to sign it, and you're done with this. Right? So retainer receipt. So you've got the money in, that's $665. Assuming, I'm going to assume that this money now has been deposited into the bank as well. If that's the case, your bank statement would say $665 as of this day. If I go into my bookkeeping system, in this case uLaw, and do that same trust reconciliation process again. Voila. Now you see a transaction appear. Previously, there was no transaction. Now, the fact that you've captured the moment with the date, right, with the transaction details, this clearly states what was this $665 in. Oh, it was a retainer for Mary Poppins, whose file number is that, and it came through this check, as detailed as you can possibly expect it to be. And that's the amount, right? That's where the reconciliation process begins. So you're capturing the moment reflected in reconciliation. Let's go ahead and dock it and keep this straight and forward. I have only 5 more minutes. So let me go ahead and say final closure. Initial meeting, second meeting, virtual meeting. Of course, virtual meeting is really the save the day, right? And final closure. Let's beautify this, make it look good in front of the client. And I'm just going to toggle this billable time. I'm going to say, you know what, it's flat rate of $500, and I'm going to save. So now we've got 500, and I'm just going to assume there's taxes here, so it's going to be 500 plus taxes in the province of Ontario, 13%, and now it's 565, clearly articulating that in the flat rate. Now, does this reflect in the reconciliation statements? That would be a good trivia. It does not, right? Because no transaction, financial transaction, have left the bank or reached the bank, right? This is an internal docketing of effort. Nothing has moved unless you have moved it. And there's no reason to move it yet because you have to provide an invoice so that you have now the authority to move it. But before we go ahead and do the invoice, let me just add the disbursement. So I'll say disbursement. Again, another capturing of a moment in your legal life. And I'll say disbursement. And let's say it's a miscellaneous expense. Well, let me go ahead and say it's a court fee of $100. And I'll make that tax exempt. And if it's a legal accounting software, it also allows you to capture the business accounting software side of things, which most of the legal accounting softwares do. This is a kind of a double whammy capture. So the top part is the disbursement that's about the client. The bottom part is for your own firm to know how did you pay for it. Especially if you paid for disbursements using your general account, the money didn't come from anywhere else. It came out of one of your own general accounts. So this is your placeholder to say, yeah, you know what, I paid for it. It was tax exempt, and it came out of my TD general account, right? Who did you pay this to? I don't know, Ministry of Finance maybe, or Attorney General. And how did you pay for it? Because this is important for you to record this in your expense book, in your journals. The methods are very important. And you can even print that check if you need to, but then you go ahead and hit save. Okay? Does this reflect in the general reconciliation and trust reconciliation? The answer is no. Right? Still has not reflected in these accounts. Except for the court fee, which was a disbursement. Now let me go ahead and generate that invoice. I'm going to go ahead and say invoice. For purposes of time, I'm going to skip the pre-bill. I'm just going to say complete. Get the preview and invoice. So this is now for your client to say, here's proof that I've spent $565 on legal fees for all. This is all the work that I did, my initial meeting, Zoom meeting, all of that. And then here's the $100 disbursement that I paid for the court fee to the Ministry of Finance or Attorney General. And basically through that invoice, getting the authority to say, you know what, I'm going to be moving, just letting you know, $665 from my trust account into my general account. Okay, and this gives you the audit trail of what that $565 was, what happened with my disbursements, how much of money did I get into the trust to begin with, and the amount due. You can have a digital signature, and you're done. The one last thing that you have to do to make your money is to move the money, and yet another capture moment is moving it from trust to general. Of course, you would do this in real life, but before you do that in real life, of course, you would need to know what the real amount was. So the legal accounting software, such as uLaw, tells you what that amount is. Not a penny less, not a penny more, right? So basically it tells you 565 and 100. So if I were to choose all the transactions, that's the amount of, oops, I think I lost my internet for a second there. I apologize. Let me go ahead and do that again. Oh, there you go. I got it back. I've got $565 plus $100. That's the maximum I can transfer. So it cannot be a random number. Once again, keeping you compliant, right? And then moving it from your trust account, TD trust account, making sure it's the right general account, and you could do an electronic fund transfer. You can fill out Form 9As, all that good stuff right away. Right? You download it and you're done. Now you have, hopefully, in real life, moved that money from the trust to general. You've logged into your TD, you moved 665 from the trust account into the general account, which means 665 has left your trust account, 665 has been deposited into your general account. Now if I go into my reconciliation and do my trust reconciliation, now I see two transactions. I see the 665 that came in as a deposit, so you can see the labels are straightforward English. Money coming in as a deposit. It's not debits and credits because it's different for different parties. It's deposits and withdrawals. 665 was withdrawn from the trust account, and what was it for? The bank would not tell you this detail. Your bookkeeping system needs to support you to tell you this level of detail. Or you have to write yourself this level of detail if you need that to be in memory, right? Where else does this hit? It has also hit your general reconciliation. If I do my general reconciliation, and that's for my TD account, I guess this was for a different transaction. So the 665 was the trust transfer that we did for the 565 plus the 100 of 665. So this was for a different matter, MP. Oh, maybe it was for $100. Okay. May have done two. Okay, so money coming in, money going out. Now if you're ready to do your trust reconciliation, I'm going to leave it with that. All you would do is you would choose the date that you're going to close. You put the amount in your bank balance. And now you look at the transactions. Does this exist in my bank? Yes. Does this reflect in my bank? Yes. And if it has, then you're ready to reconcile. And when you reconcile, of course, those 4 data points that are required in that trust reconciliation are captured. And for those who are wondering, the Form 9A, this is the Form 9A more specific to the province of Ontario, where if any time you do an electronic fund transfer between a trust account to a general, or any time money is leaving the trust account electronically, they do request a document such as this. And you can see here is my trust, full trust account or mixed trust account reconciliation. The bank balance, any outstanding withdrawals, payments, none for this time period. Here are the transactions that occurred during this time period. There was a 665 in and out. And your trust listing, which really lists all the clients, the last activity date, and their trust balance. And as you can see, there's a color code, again, on uLaw. I'm being told that the screen is back, but that could just be the internet at your end, if you wouldn't mind, because I know I'm able to see it here. So let me see if I can refresh it. The client trust listing, of course, has all the client information and balances. And last but not the least, the trust comparison between what the bank has to say and what your trust ledgers have to say. Once you've done that, of course, generating the trust ledgers and journals for the time period is just a matter of clicking a button and generating it, because the numbers have been warranted for because of the reconciliation process. So I'm going to close the meeting as of today, because I've been warned before as to why I'm exceeding my 1 hour limit, but I just want to show you real quick. Once you do reconcile, generating the ledgers and journals in a certain template that's expected of the Law Society is easy as generating this document. Okay? So once again, just as a wrap up, reconciliation as a process is important. What's more important is having the process to handle the reconciliation process. And it starts with being able to find a discipline or a process to capture the events as they've occurred. If you lost time, it's okay. You could still catch up with doing simple tasks such as importing bank statements from previous months. You can just, depending on the bank institution. But important to bring all the data in, enter it into a system of your choice, and then reconcile or compare those transactions with what the bank has to say, and make sure that the reasoning, if there is a mismatch, whether it's an outstanding deposit or check or bank error, really highlight what that issue was, and then generate all of the required ledgers, journals, receipts, documents that are all part of that monthly reconciliation package. Okay? And with that, I'll call it a wrap. I definitely want to thank everyone for joining me for today's session. And we'll look forward to seeing you in our next webinar next Friday at the same 2 p.m. Thank you very much. Have yourself a fantastic weekend ahead. And yes, if you do have any questions, please do email us at support@ulawpractice.com, and we will do our best to respond right away. Thank you so much.